over 1% gone in terms of the cut that you're seeing for the Hong Kong market.
There's nothing between now and all-time highs, which is 19,992.
They are market leaders currently, and they say that this market leadership continues. Very, very strong, 65 points higher now.
The whole breadth of the market is that's where the opportunity is in the small and mid-cap segment.
My stake has increased to 1.04%.
Now, potential beneficiaries of this ethanol blending program is one of them. The major ones is Praj Industries.
We can talk about EBITDA in the range of anywhere between 17 to 20%.
The momentum in the market continues, and now we're eyeing our all-time high levels.
Over 20,000 crores for the equity inflow. It's at 20,160 crores.
Lenders are looking to extend the deadline until the last week of September.
India really led by talking about purpose and shared values.
The Nifty is now less than 50 points away from that 20,000 mark.
Okay, we're all waiting, I can tell you that much, for that 20,000 on the Nifty. With us here on a fresh new edition of Closing Bell. That was, of course, a small clip of the day so far and how the action has panned out. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Rima and Surabhi right here. Guys, hi. Afternoon.
And, what a day. 40 points away now. But I won't start counting down. We know what happens when you do that, right?
Well, we got to 19,992 and then stopped last time. Nigel, hi. Good afternoon. So maybe today, Nigel is betting on tomorrow. So
tomorrow. Tomorrow's the date.
Tomorrow. I'll do it tomorrow.
No, but I'll tell you what, guys. You know, Prashant, the last time around we went so close. Everyone was making this fuss about 20,000 was just a number. The markets had it their way. They took us to 19,992 and they said, we're going back towards 19,200. But this time around, 20,000 is there. It's there for the taking.
Oh, yeah, absolutely. And you know, the broader markets, right, they continue to charge ahead with whatever the Nifty or Bank Nifty has been doing, not doing, no problem at all. And I think that is the part of the market we've been focusing on as well. So just a quick couple of points before we go into the show. We are, as Surabhi said, 35 points away. So, yeah, I mean, 19,964 is where we are at, almost there. 20,000. Of course, is the psychological level. 19,992 technically is the previous all-time high. Bank Nifty is trading above the 45,312 mark on Friday. I mean, that basically is a 61.8% retracement of the July to August fall. We traded above this level last Friday, but couldn't close above it. So we'll see. And rally in mid and small cap continues. Pace of gains has accelerated from doing 2% in 5 days. We're doing 4% in 5 days. And if today's 1% rally in mid-cap and small caps is any indication, I mean, that I think continues this week as well. So just phenomenal, the move that we are seeing right there in that space. Rima.
Well, it's the 7th day of gains. On the 31st of August, the Nifty had gone down to levels of 19,250. And from that period, in the month of September, we've seen a rally of more than 700 points. And as we sang, we're counting down to that magical number of 20,000. It's yet another day of record levels for the mid and the small cap segment. The index, individual stocks continue to rally. The entire Adani Group basket has been inching higher. The group market capitalization today has hit a 7-month high. And Adani Ports Enterprises, these are the top gainers on the Nifty right now. Adani Enterprises up close to about 4%. And you've got strength in Adani Ports as well. Apart from that, banks, banks were the missing piece, the missing link, which was holding us back. But for the last few days, even the banks have started outperforming. So the Nifty banking index is higher by close to about 350 points right now. In the last few minutes, names like Axis Bank, pull up an Axis Bank, HDFC Bank, they've started ticking higher and higher. And the PSU banking index, for the day, it's up close to about 3%. This month itself, it's seen a rally of close to about 8.5%. And one more stock, Surabhi, as I toss it over to you, look at Power Grid. This is one stock which has seen a phenomenal rally. It started off trade a bit quiet, but again, it's now picked up in trade. Just a barometer of this entire investment-grade stocks, which are doing well. Not investment-grade, but investment-related stocks.
Yeah, absolutely. I mean, the whole CapEx play, the power play, the PSU play, call it what you want. And I mean, the story just continues day after day. In fact, today, as Rima said, in terms of missing pieces, there aren't any on the Nifty. You have a Coal India, but can you blame it for cooling off after a 20% rally? Or an ONGC for that matter, which has also had a good run as crude prices hit $90. So these are the only 2 or 3 which have a bit of red. Otherwise, it's a hugely sort of healthy-looking green screen from the bulls' perspective. On the Adani Group, let's pull up the stocks because it's not just ports and enterprises where promoters have added more stake, because on both Adani Ports and Adani Enterprises, there's a 2% increase in the promoter holding. That's one trigger. And on ports, of course, look at the way that stock is rallying right now. On ports, there is the added impetus of this India, West Asia and Europe economic corridor. In fact, on that note, let me move beyond the Adani Group. Adani Power, look at that stock, an 8% higher enterprises, phenomenal rally on the Adani Group. But the G20 buzz is keeping a lot of stocks afloat, and that trend has remained throughout, intact throughout the day. Railway stocks, as if they needed any further triggers. Well, the chatter or the sentimental push is enough, it seems, because of the stock of this, rail and sea connectivity corridor between India, the Middle East and onwards to Europe. And that's what's happening. IRFC, another 10%, RailTel, Aircon, IRCTC. And sometimes you really ask yourself whether IRCTC really will benefit. It's a ticketing company. But this is not the market that thinks. It's buy now, think later. That seems to have become the mantra for a lot of stocks, particularly in the mid-cap arena. So PSUs are very strong today. I just wanted to show the names of the PSU banks that are rallying 5, 6, 7%. Canara, UCO, IOB, you name it, Punjab and Sindh. The entire basket is up and about. Names like SJVN, not only is it a PSU, but there's an added trigger in terms of some order wins and some news flow. And we'll talk about that as we go forward. But a phenomenal day. Nigel, and really don't know what to look at right now. Mid-caps that are simply bursting through the charts, or even the big boys, the large caps, they've done really well today.
I think the banking stocks, they have come to the party in the last two sessions, and that's why this move really is looking quite good. Just take a look at the Nifty Bank. Even today, it's doing a relative outperformance in trade today. And a few of the stocks, I think, have moved to the high point of the day. Just pull up Axis Bank. In the last few minutes, that's got a bit of a leg up, so that should come up for you on the screen. ITC as well has seen quite a sharp correction from around 500 rupees to 430 rupees. Today, it's trying to crawl its way back up. And big boy Reliance Industries as well. The last 1 hour or so, you have Reliance Industries as well. That's doing quite well. Now, these are heavier weights of the stock. That's why just pointing out some of these names. And auto as well, they're doing very, very well. Whether it's Bajaj Auto, whether it's Tata Motors, well, they in fact are doing quite well in the session today. But how do you position yourself? Final 60 minutes, whether or not we get to 20,000, well, time will tell. For the time being, we're at the high point of the day. Mitesh, what do you make of today's session? And if you have a long position, where do you put your stop loss?
So I think the session is good, and either, as I said, I think if not today, if not tomorrow, I think in the next couple of days, the setup does suggest that we should get past 20,000 now. When is something, which I wish I knew. But yes, I think the setup looks very strong, and there's no loss of momentum as we approach the last or the previous high at about 19,992 or the psychological number of 20,000. So I think I would assume that by tomorrow afternoon we should be possibly trading above this level. Having said that, maintain your long positions, and the stop loss, if somebody has long position, the stop loss should be around 19,870 on the spot, which is about 80 points low. Once we get past 20,000, 250, 300 becomes your immediate target area, and then maybe more. So we'll go ahead with that kind of view. On the stock side, I have in fact two banking names. After a long time, the banking stocks have come out of underperformance, are trying to get into some kind of a positive traction. So State Bank of India is a buy with a stop at 585 for targets of 605, and PNB is a buy as well. Keep a stop at about levels of 67 for 73 as the target area.
Okay, all right. Thanks a lot for that. Well, let's focus on a couple of stocks, and then I think we have Mehrabun who's going to be joining in to discuss a couple of them. So Mehrabun, welcome to the show. Thanks so much for joining in. GMDC, that's the top stock we're looking at. Massive volumes in today's trading session, and the stock has nearly doubled from the start of this year. Now, the annual report came out on Friday, post-market hours, and there are a couple of details in there that has excited the street. They say that the key milestone of the year was the allotment of 2 coal blocks outside, in Odisha. And this is important because it means they're expanding their geographic performance, and also they're adding a new segment. They normally do lignite. Now, in fact, they're talking about coal as well, post the allocation of these blocks. And now they're talking about expanding their geographic presence to Odisha from just being in Gujarat. So that's pretty good news. The management says that the new blocks, the coal blocks, are going to be planned. They're going to be developed in a phased manner from here on, and they're expecting full mining capacity in the next 4 to around 5 years. The biggest statement, though, in whatever they said is they're saying that the net worth by 2028 will go up by close to around 4 times. They see it increasing by 4 times, which is massive. That's a big news that came in there. So what are the triggers you track from year on? First quarter's numbers were very, very poor. You're looking at an improvement in operational performance. The second quarter is the monsoon-led quarter, so you won't see too much of improvement, but second half of the year is going to be important. The next one is the rare earth opportunity that they've been talking about. So how much of that is going to be reflected in numbers? And the third factor is they've been allocated these new coal blocks. How do they develop it from year on? So these are the top triggers. For the time being, though, the stock is flying away and volumes very, very high. Meribun, good afternoon. Thanks so much for joining in. What do you make of this one? I recall the stock many times went to around 150, 180 rupees and then it pulled back. But this time around, it's kept getting triggers, whether it's that dividend play, whether it's when Prime Minister Narendra Modi spoke about the PSU stocks. And now you have this coal trigger as well that will play out in the coming years. Your view at around 280 rupees?
Nigel, first of all, let me state something that you are one person who has spoken to me among all the anchors of various channels put together, and I really appreciate that you always come out and gone on mentioning something or the other about a GMDC or an NMDC.
Thank you.
I think we have to accept the fact that the way the stock has gone up, we have to accept the fact that somewhere we are responsible for having ignored it for so long. The fact that this is one more stock which was depressed valuation, people were just refusing to look at it. Value hai, but people are just not buying it. But the stock has really made a solid move, and personally also I'm looking at this stock and maybe buying it, a clear disclosure. The reason for buying it is because, yes, the story is turning. The biggest trigger, according to me, came a few months ago when Mr. Hasmukh Adia was appointed as the new chairman of the company. He is serving as the principal advisor of the Gujarat Chief Minister. He has had he's a veteran of 37 years experience as a bureaucrat goes, and he is rated as one of the most no-nonsense bureaucrat who believes in doing what he has decided to do. When he was appointed as chairman, well, eyebrows were raised, people started wondering, oh, let us look at this stock positively, and maybe that was the first trigger for the stock. Then you rightly mentioned that the company bid for 2 coal blocks successfully. These coal blocks have an annual capacity of 21 to 23 million metric tons, which are expected to be operational within the next 2 to 3 years. Now, company has been into lignite mining. Lignite is available at nearly 30% discount to the landed price of coal. But the point is, nothing much has happened over the last 3 years, or 4 years, I would say. The reason being that there were 2 years of COVID, Gujarat had excess rainfall last year, nothing much has happened. But now the company has laid out a plan. So one is coal mining, one is lignite. They're planning to really expand their capacity in a big way. And third is the rare earth minerals. Mind you, this is something which India imports in a big way. And the rare earth minerals, the company's site, which is at near Gujarat, I think a place called Ambadunigar, is believed to be the single largest location resource of rare earth minerals, which the company is planning to possibly exploit and use it to its potential. So here is a company which was lying ignored. Here is a company which was in lignite mining. Nothing much happened over the last 3 to 4 years. Now the real decent capital outlay, Mr. Hasmukh Adia as the chairman of the company right now, plus coal mining and plus rare earth minerals. I think you are sitting on a stock which can give you multiple returns, if you allow me to state it, if all goes well. So despite the fact that the stock has gone up from 180, 170, 190 to the present 275, 280 levels, I think there is a lot of meat in it for potential investors, including somebody like me, who is clearly disclosing that I intend to buy the stock. Now, can this stock be a 500, 700, 900,000 rupee stock over the next 1 to 3 years? Distinctly possible. I'm not saying it's going to happen. I'm saying this is a stock which, if you believe that, if you have a positive outlook on mining, and if you want to go in and buy into one stock, this could possibly be it. A stock with a lot of potential, a stock which has run up very sharply. There could be a pullback, maybe of 10-15%, I really don't know. But somewhere along the line, you need to have high conviction on it, that things will happen, and go and buy into it. So very positive on the stock.
Okay, wanted to get your views in. Meribun, afternoon on the railway import stocks. They're in focus as the G20 summit saw the launch of the India, Middle East, Europe Economic Corridor, which aims for stronger trade ties and energy flow from the Gulf to Europe via railways and ports linked to India. But Meribun, before we get your views in on this entire news piece, let me get in Vivek to fill us in on the details and the developments. Vivek.
Well, absolutely right. Railway stocks, port stocks, absolutely flying in the session. This positive sentiment news flow that's come in as far as, the upcoming India, Middle East, Europe economic corridor is concerned is what is actually keeping the stocks quite active. But let's have a look at, what exactly are the announcements and how exactly do the Indian companies stand to benefit from such a development. Number one, the PM has gone ahead and announced a multinational rail and shipping project. This is to link India with Middle East as well as Europe. And, the countries actually are many. So India, UAE, Saudi Arabia, European Union, France, Italy, Germany, as well as US are all of the, countries that are actually involved in this particular project. So looking at the proposed corridor, it will comprise of two separate corridors. Number one is the Eastern Corridor and the other one is the Northern Corridor. The Eastern Corridor will connect India to the Arabian Gulf and the Northern Corridor will connect the Arabian Gulf to Europe. So, what is the involvement of Indian companies? And, that is something at this point of time we are still seeking clarity. But there's one very important statement that we need to keep an eye out for. Mr. Ashwini Vaishnav, India's Union Minister for Railways, says that number one, IMEC will reduce the goods transit time between India and Europe. And what he is saying is that Indian companies will both execute as well as provide technology for this particular project. So which are the stocks in focus? All of the railway stocks, so RVNL, IRCON, RITES, IRFC, RailTel, even ports and infra stocks in names like L&T with exposure in the Middle East, Container Corporation. But at this point of time, we need to be mindful of the fact that quite a lot of details are still pending. Number one, timelines of further announcements, granular details of each nation's participation, and in terms of especially funding and capex requirements, role of individual companies that are especially the listed ones, and extent of role, if any Indian company is there, whether it's just an execution partner, whether it's a project management consultant, or whether they actually are the tech partner as well. And lastly, the actual size of the order wins, and when do they actually manage to go ahead and execute it.
Absolutely, Vivek. Got that. I think it's your caution is well taken, and it's good to put that out because we need a lot of the specifics, especially given the fact that these stocks have rallied 150%, 180%, in some cases 200% already this year. So I think that's good to put that caveat out there. Thanks very much. But as I said, this has become perhaps a market in these cases, at least in railways, where it's a buy now, think later sort of euphoria that's playing out. Let's take the conversation to Mehraboon. Mehraboon, hi, good afternoon. I don't even know what to ask. Railway stocks in this kind of a price move, and then you have this buzz from the G20, and like Vivek was saying, we have no idea who really gets the contracts, and if it comes to, how many listed companies, margins, orders, we know nothing. But we have to deal with a market like the one we're in right now. What's your advice?
Survesh, I'm smiling over here because you mentioned it so very well. By now, dekha jayega. Things will happen later. And I think that is true. I think what is happening in railways is happening in quite a few other favored sectors of the present government, let's be honest. I think railways was considered to be the lifeline of India's nation, and there were clear indications when this government took charge maybe 10 years ago or 9 years ago. And people have bought into it. Now the narrative continues to be positive. People are refusing to look at the stock price, refusing to look at the valuation. Then who are you and me to possibly stop people from buying it? Because I also believe that over the last 27, 28 years that I've seen the market, I have never seen a railway minister possibly so active, so energetic as what the present regime is having. I think a lot of things are happening, no doubt about it. And the things continue. The stocks could go higher. Will there be a pullback? Who knows it? If and when the narrative turns, I think this stocks could be 10, 15, 20% lower. But the story is excellent. The story is excellent. And what was announced yesterday is just one more trigger, which as of now people are not understanding. People are saying, let's wait for the detailed announcement to come. But it's not going to make too much of a difference. So I'm personally holding with a clear disclosure stocks like a Titagar Wagons, a Texmaco Rail, RVNL. And I continue to hold on to it. As I said, you can't challenge the narrative. And the narrative is still like, go and buy it. Things will happen, things will happen, things will happen. So I remain bullish on this sector. I'm not saying no. The stocks have gone up too sharply. It's difficult to justify the valuations at present. Again, what you said rightly so, hoega, dekha jayega. So this is one thing which is happening as far as railways goes. There are other sectors also like green energy and all that. People don't know how to value the stocks, even defense for that matter. But these are favored sectors of the present government. And if the regime continues, for all you know, the stocks could be much, much, much higher than this. What do you buy in railway stocks right now? I think the names which I mentioned, I'm personally holding it, but there are many other alternatives also. And if somebody doesn't understand what to go and buy, a particular railway stock, you can buy something like a Bharat Earth Movers Limited, which is not only in railways but which is other sectors also. A stock which I'm still not owning, but I intend to buy one fine day. So there are interesting picks right now. Valuations, don't try to look at them because you will feel dizzy that how do I justify it. But the fact is the sector is moving and possibly on top of the radar as far as the present regime goes in New Delhi.
Yeah, they say, right, I remember another favorite market saying, never stand in front of a speeding train or a speeding truck. Like you say, don't catch a falling knife, don't stand in front of a speeding train. And that's exactly what we have now, 17 points away from that elusive mark of 20,000. Let's see if we do it this afternoon itself. Nigel was telling us tomorrow. Nigel, Nifty seems to be challenging that theory. So let's see where it goes. The ticker's up. I don't want to say any more.
Yeah, 25 points to go. I mean, I think the distance that we're pointing out is the distance to the all-time high. So that's 18 points away. But I think 25 points is what we need to get to go to 20,000. So if it goes today, why not? I mean, Monday, good to have a good start, and then it's setting us up for the remainder of the week as well, so it'll be. But I'll tell you what, for the time being, let's slip into a short break. On the other side, we'll be joined by our Alpha Manager of the Day, Amit Jaswani, our Stallion Asset, will be joining in. Stay with us.
Welcome back. Well, it's tantalizing. It goes up and then cools off a little bit. 19,970 on the board as of now. For all practical purposes, this is a 20,000 market in the mindset. The ticker will perhaps follow suit. That's what's been happening. And therefore, it's probably the right time to ask this question. It's the billion-dollar question and one that's on most people's mind, most market participants' mind. Are we getting in a bubble or is this just a continuing bull market? And Nimesh has been looking at data, talking to lots of people to try and find an answer to that billion-dollar question. Nimesh, take it away.
Hi, Sylvia. I don't think anybody has an answer to it, right, as to whether we are really in a bull market or this is just a start of a bubble. So I've looked at some data as well, but broadly, as we inch towards 20,000, that's even more harder for people to believe whether we are in a bull or we are seeing a bubble as well. So I've just looked at the past 4 peaks. In the previous peaks, the key reason for the markets to fall, one, of course, was due to the global events, and second was the possibility of the FPI flows, massive dominance, and the twin deficit. Now, that seems to be changing a bit for India, right? For the last couple of years, we're seeing a massive inflow from the domestic guys, which is having a big cushion to the FI flows, and of course, the twin deficit as well has improved for the better for the Indian market. So that's a bit of a cushion out there. Now, if you look at the valuations compared to the global markets, India's valuation compared to the US market, we are nowhere yet to the premium to the US market. Same is the case with the emerging markets as well. We're nowhere near to the premium to the emerging markets. Even to our own valuations, we are at a still discount to the 1 standard deviation versus the historical, which we are at a premium towards the peak level. So the valuation wise, from an overall market point of view, it's not hinting towards a big bubble or a big peak, so to speak. Now look at the other indicators. Like I've just looked at the past 4-5 peaks and where valuations stand compared to what we are right now. The Nifty 50 forward EPS. If you look at 2008, the Nifty 50 EPS was 22 times. In 2015, we had hit a high of 20 times. 2020, 22 times. 2021 was when we saw 25 times on the Nifty 50 EPS. Even now in 2023, we are just around 20 times. If you look at the emerging market, MSCI EM's valuations, we were around 14-15 times, and even now in 2023, we are around 14 times. So the valuation picture doesn't show too much of an alarm as far as big peak or big bubble is concerned. If you look at the momentum indicators, let's look at that as well. The advanced decline ratio in 1 month before the peak. In 2008, we had hit 1.6. In 2020, we had hit 1.3. In 2023, we are still at 1. Even if you look at the Nifty 500 companies which had hit 52-week high just 1 month before the peak, just look at that percentage as well. In 2008, we had hit almost 12% of the Nifty 500 companies who had hit a 52-week high. In 2023, we are still at 6%. So even that momentum indicator is not suggesting too much of fraud in the broader markets. Yes, there are some pockets which are seeing a lot of frenzy. There could be some pockets where there is a fraud or maybe a bubble as well. But from an overall market perspective, whether it's valuations or momentum indicators, they are not suggesting that we are still in the bubble market yet.
Okay, thank you very much for that. Let me move on now to the mid-cap space and the breathtaking rally that we've seen. Now, Kotak Institutional Equity has written a report on it, and they title it the Mad Cap Dash. Not Mid-Cap Dash, but the Mad Cap Dash. Let me run you through some, numbers. Now, the Nifty Mid-Cap Index is up 32%. The Small Cap Index is up 35% in the last 6 months. The mid and the small cap funds of domestic equity mutual funds have seen inflows of 21,500 crore rupees at a time, when the large cap and flexi cap funds have seen outflows. This is data over the last 4 months, but it excludes the one which just came today. And finally, 6.4 million new folios have been opened in the mid and the small cap space recently. If you look at and this is an increase of close to about 34% on a year-on-year basis. Now, Kotak sees limited point in trying to find fundamental reasons behind the steep increase in stock prices of several of these companies. They say there is no meaningful change in the fundamentals of most companies. In fact, according to them, it's worsened in many cases. The primary driver of this eye-popping rally appears to be irrational exuberance amongst investors, based on the steep price increase that we've already seen in most of these stocks, and this has pushed up return expectations among retail investors. Now let's get the Kotak view on some of the favorite mid and the small cap stocks. These are stocks which largely fall in the investment sector, which means your capital goods, defense, EMS companies, railways, real estate, renewables. All of them broadly comes under the investment category, and they've delivered some eye-popping returns. Look at that, 200% for Mazgaon Dock. Suzlon is up 180%. Now, according to Kotak, these stocks, the investment stocks, they're saying we will have a decent investment cycles, but they're not sure about the quality of many of these stocks given the historical weak execution and governance track records. In addition, many of these sectors fall in the B2G category, business to government, or B2B categories, which raises issues around execution and profitability. So according to them, the market expectations on both revenues and profitability may be too optimistic. So this leads to Kotak dropping their recommended mid-cap portfolio. They cannot find too many stocks beyond the BFSI space that offers decent potential upside. So they believe that there is some irrational exuberance in the mid and the small cap space.
You know, we had Sanjeev Prasad with us, I think it was on Thursday or Friday, Thursday or Friday, making pretty much sort of the same point in words. He almost threw up his hands and said that exactly what you said. So we may actually should try and play out those sound bites as well, coming straight from Sanjeev. You know, I just want to quickly take a quick look at the valuations, right, for this part of the market, exactly this part of the market, mid caps and small caps. And there you go, that's mid caps. This is now versus the earlier peaks. So Nimesh put this data out for Nifty. You know, this is for mid caps. So currently, all of this is Bloomberg consensus 1 year forward. We're at about 24.5 odd times. As you can see, we've hit levels above the significant peak of Jan 2018. I mean, the market after, you know, the peak in 2018 didn't do anything for a couple of years. But we are still below the October 2021 peak, which was 33.5 times. The 10-year average 1 year forward P multiple is 20.5 times. So, yeah, I mean, you know, except the October 21 peak, we are kind of pushing to those levels, higher than those levels. Same thing for the small cap index as well. Again, 1 year forward versus previous significant peaks and, you know, longish average. I could find the 5-year average on Bloomberg. So we're at about 16.3 times higher than the May 2018 peak. For small caps, that was the peak, and the 5-year average is 16 times. And of course, below where the index had gone to in October of 2021. That was the post-COVID frenzy that we actually saw. So, yeah, I mean, unless, of course, the case is that we are going to go into that kind of a frenzy post-COVID, huge amount of participation, etc., we are kind of back above at least the previous levels, even on an average kind of a basis. So just nothing outrageous or anything, but we are kind of getting there,
you know,
most definitely.
Prashant, and that probably explains. Basically, I think the data that you put up shows that we're crazy, but not as crazy as we've been in the past when it comes to valuations and mid and small caps, right? Yeah. And maybe that explains the way investors are thinking right now, because I just want to tie that in with the mutual fund data that we got today. And look at the inflows. It's the same trend, continuation of the same trend, that large caps are seeing outflows. Not a huge outflows, but generally outflows. And mid caps and small caps are pulling in the money. And by the way, okay, 3 points away. Good that the ticker has our eye on that mark as well. As we're looking at that ticker come down, okay, 2 points, one. Let me just hold on to the MF data since we are so close. Let's just see what the moves are in terms of stocks this hour. It's been on the banking side. That's, of course, a strong move altogether in the market. The Adani group of stocks, 1 point away, just 1 to 2 points away right now. Apollo Hospitals has been very strong on that UBS upgrade right from the morning. You've got autos fired up. IT has done really well. I mean, some of the IT names, a lot of the Nifty IT names are actually at their 52-week highs. So IT has been a great contributor to this rally, and banks have decided to participate. Power, of course, has been the big one as well. So let's wait by, just about a point away. It's teasing and it is tantalizing. So it'll happen. Okay, record high. There we go. Okay, that's a record high. It's not the 20,000 mark, but it is a record high. Yeah. The last time we were here was about a month and a half back. It was, I think, the July month where we were at those levels. So still exactly around those levels. Just few points shy of 20,000.
Absolutely. I mean, so yeah, all-time highs, and we are. I would say, kar do hai, Raj, khadam karo 20,000.
We can get on with life, right?
But let's see. Yeah. It's just 10 points or odd. But yeah, I mean, some data coming up at the bottom of the screen. It's across the earlier high after 52 sessions. So we got to that 19,992 odd levels, and then there was a bit of a drop. And we're basically back at those levels once again. And I would say in a much stronger way, because back then, the mid and small cap rally was just about getting started. Now, of course, I mean, the rally there is really entrenched. So back then it was kind of a large cap rally with mid caps and small caps starting to participate. Now it is actually quite the opposite. Since the 31st of March, for example, you've got the broader markets which have done so much more as compared to what the Nifty or the Sensex have really done. But I think
from the March lows, which is towards the end of March, right? 29th, 30th,
31st of March was the rally began. We'll never know what happened on the 31st of March because that was,
new financial year, new beginning, new mindset.
So from those levels, the Nifty is up about 17, about close to about 18, 19%, while the mid caps are up more than 40%.
Exactly.
Right?
So
that's the eye-popping rally in such a short time.
Absolutely. Well, let's go across to Nigel, who's actually standing by on the big wall. He's walked across to the big wall to kind of detail the picture, the journey of the last, the journey to the new all-time high. Nigel, take it away. Okay, I think he's not walked away, but he's sitting down. But go on, Nigel.
Well, that's right, Prashant. Let's get a couple of data points up for our viewers then on the screen. Yeah. Well, this journey from around 19 to 20,000 odd, it's taken 52 sessions. The previous one from 18 to 19,000, it took 425 sessions. So it took a lot longer. This time we were off the blocks and we found our form and style. But remember, we have had better 1,000-point runs in the past, particularly the 16,000 to 17,000 odd when we did it in just 19 sessions odd. Well, I'm going to put out some data from the time that we hit this 19,000 odd mark. So the big indices, PSUs, well, I've been talking about it, whether it's the PSU banks or the PSU index on the whole, it's up between 19 to around 20%. And high beta has done very, very well. So metals as well as real estate, they do well, and that's perfectly depicted in the indices. Well, the IT space, that's held one end up because the Nifty bank has been off color periodically, but the IT index has been up close to around 13%, and the broader market, 17 to 20% kind of returns is what we are seeing. So let's give you some of the big gainers. On the Nifty itself, you have stocks that are up between 17 to around 28%. All of them should come up for you on the screen. A few losers in there, UPL, Britannia, and HUL, they are under some pressure. But the broader markets, that's where the party has been. And I said PSUs have done well. Let's pull up a few of these big gainers in the broader markets. IRFC, not 100%, 160%. Kochi Shipyard, that has been up and about. IRCON, MMTC, SJV, and all of them have done very, very well. And Jyoti Laboratories as well, up more than 70%. But a couple of underperformers, you have Vedanta as well as Delta Corp. But otherwise, it's been a very, very good run. 19 to almost 20,000 in just 52 sessions. Back to you guys.
Well, it's not yet done, Nigel, I'll tell you that. Still 20 minutes to go, so who knows this 20,000 mark. Anyway, we'll watch out for that. But thanks for the data. And actually, our next guest is coming in. It's good to have, him on the show today, Amit Jeswani, founder and CIO at Stallion Asset. And of course, they run their fund where the asset size is it's crossed over 800 crores. Good to have you on the show. I was going through the portfolio holdings, and what really struck me was that you seem to have a cautious view on that one part of the market that's completely blown up. And I'm talking about the PSU space, right? So explain to us the thought, the rationale, and how you feel right now. I mean, whether you're still sticking to that theory, given what the market has been doing with PSU stocks. A lot of people are talking about a complete re-rating and a new era and whatnot.
And thank you so much for having me on your show. Surbhi, we've missed out on that rally. We now feel FOMO'd because we've missed out on that part of the rally. We didn't invest in PSUs for 10 years, and that was okay. By not investing in PSU, that didn't have any impact on performance. But now, we couldn't have imagined this kind of melt up. There was no pattern and framework which could have said that you will see PSUs doing what they have done. It's just amazing what they've done. And as they say, the grapes are sour on the other side. So it's sour grapes for us.
No, Amit, actually, on a lighter note, the signal came from no less than Prime Minister Modi, who, if you remember, said, PSU.
That was like 1-2 weeks.
Clarion call, if you remember. I know, and I'm just joking. But are you changing your view, the way to look at things there on the PSU side? Because a lot of, if the government is going to be a big driver of capex, just 1 minute, Amit, I'll just come to you. I think I'm just waiting. We're just, half a point away from 20,000.
There we go.
So I just want to say we hit 20,000, I'll come to you. So we're almost there. got to less than within 1 point.
It's happened, Prashant. 20,000 on the Nifty.
Yeah.
We can finally say it after a wait of 50 plus sessions. We've traversed the distance, traversed the journey, and the 20,000 mark, the next decade, the 20,000 decade is here.
So we're at 20,000. We hit 20,001. So the high is 20,002 actually. So there you go. 20,000 finally there. It's from the 19s you've moved to the 20s. I think, I guess. So let's hope we stay there now and don't fall back into the 90s.
And the last leg has come, the contribution has come in from the FMCG names. They were the ones which were a bit left out in this rally because consumer demand has been a bit muted, plus valuations were on the higher side. But pull up an ITC, pull up a Nestle. These are stocks which are doing quite well. And of course, banks are contributing. So ICICI Bank has seen quite the up move in the last few minutes. So 20,000 is here for the first time.
And I think this rally is going to be remembered for new leadership because till now it was IT and it was banks. That was always the narrative.
Every time consumer, right?
Oh, consumer. Every time that we were covering these 1,000-point distances, it was one of these big areas. This time, banks were dragging their feet for the longest time ever. IT was in the doldrums, but then IT stocks, fundamentals, and we'll get to that as we get quarterly earnings. But IT stocks decided to, take a leap of faith. And then the sector that we've been discussing, PSUs, railway, defense. I don't remember in the last so many years of my stock market reporting that we thought that it would be these sectors that will really lead the next leg of the move.
Absolutely. So it's been quite incredible in the broader market, the action that we've seen, and newer kind of stocks and sectors have come to the fore, and they've kind of contributed to this rally. And by the way, I have to say, so we were talking about IT. Large cap IT is still, in a way, kind of an underperformer. Mid cap IT has done very well, but large cap IT is still an underperformer, and banks have not really done all that much in the last. Actually, in the last couple of months, banks are still lagging. So this rally is largely come on the back of, so as to speak, hard assets, right? Old economy names which have done very well for the Nifty. So that the point I'm making is, if IT and banks were to start to participate, large cap IT and banks were to start to participate in a big way, you perhaps have got more to go here. And I think, as Rima was pointing out, the rally in broader markets began on the 31st of March, and the broader markets have done almost double of what the Nifty has done. There you have it. But anyway, we are at 20,000, and let's get a flavor of what's going on in the newsroom as well. Nigel? What's happening?
That's right. There's a lot of commotion over here. Everyone's quite excited that we're seeing this 20,000 odd mark. So, we waited for it, and I think the start of September itself, the markets were lightly poised. And after August, what a big comeback we have seen out there. 20,000, we've been counting down to this level, and the Nifty goes ahead, kisses it, and we're still holding closer to those levels. So fabulous run is what we were saying. And as I told you earlier, only 52 sessions is what it took for us to get out here. The previous run, that is 18 to 19,000, was 425 sessions. So this, in that sense, was a good run, right, guys?
Absolutely, and I think some of the points that Nimesh and Prashant were making earlier, that we're at 20,000, yet if you look at fundamental or momentum indicators right now, whether you look at valuations, you look at how we are placed today versus the historic averages, we haven't crossed levels that we saw during the previous bull runs, and perhaps that is what is giving market participants some amount of confidence that this has more legs. Let's ask Amit that question, actually. Amit, what do you think? 20,000, does this look like the beginning of a bull market, the middle or the end? Where are we on the cycle?
On the large caps, I would say this is the start of a bull market. On mid caps and small caps, you've already reached 60% of the bull market, or 70-80% of the bull market leg. But the next decade, regardless of small cap, mid cap, large cap, companies which grow at 20-30% will make it very, very, very. These are times to dream very, very for investors.
Amit, would you consider investing in PSU stocks? I know you've missed out on the rally up until now, but from here on, would you even consider investing in them across the board, whether it's in banks, PSU banks, or the railway, or the defense capex, any of these themes?
So, Rima, actually, market is moving in 18-20 month cycles. The last 18 months has been about PSU. Started with Adani, like B2G kind of counters. If you remember, pre-COVID, from COVID levels to October 2021, it was about chemicals, pharma, and technology. And after that, 18-month period, these guys went through massive corrections. Like most of your chemical stocks are down 30-40%. Most of your tech stocks corrected 30-40%. Some have now bounced back, of course. The same happened, if you think about it, between 2018 and 19. You had quality stocks which were moving higher for 18-20 months, and they all move as a pack. And then they underperform, like HDFC Bank, Kotak Bank, you know what I'm saying. The same happened in 2016-17 with the NBFC pack. The entire pack rallied together, and then they go through a very large underperformance cycle. So we are in late stage in the PSU rally. This rally is old. We just pray to God that we'll be able to catch the next leader, the next sector. The entire sector will make new highs. The entire sector will have large earning growth expectations, and you want to make it large the next rally. We've missed out PSUs. We're too late to the party. Our alphas are still very decent. This year, our alphas are 20% plus, so we don't have to go there.
So if you had to bet on the possible, 2 or 3 themes which could drive the next upcycle of 18 to 20 months, which ones would you bet on?
So, Rima, the entire change of profitability is happening in your consumer tech company. We can go wrong, but I believe Zomato, Policybazaar, Paytm, these are not recommendations. We are a SEBI-registered PMS and a research analyst company. These are not recommendations. We might have vested interest, but companies like Paytm, Policybazaar, Zomato, they are all going to post profits. The J-curve, and they are all neglected territory stocks. It's got loss to profit as a framework. When the entire sector moves from loss to profit, typically you end up making a fortune. So that would be the first sector that I would say there's a possibility. Second, after 7-8 years, you're seeing auto stocks making a comeback. You've seen the auto index make a lifetime high 5 years. And then you've got leaders there. You've got leaders like TVS Motor, who's gaining market share every year. You've got Uno Minda in the auto ancillary part. So you've got... let's see, I don't think auto will be the biggest leader because it has to start with lower valuation. New age tech, I believe, can make it very, very large if they get it right. Of course, you have to track execution here, and we can also go wrong here.
Okay, well, Amit, stay with us. Sunil Singhania is joining us, founder at Abacus Asset Management, and we also have Vijay Kedia joining in at Kedia Securities. Gentlemen, great to have both of you here. Thank you very much. Sunil, quick word. I mean, finally, the inevitable, which is, of course, the market keeps rising. You'll make newer highs, and we are at 20,000. So it's been an incredible journey, incredible market. What from here, though, I think, Sunil? What's your sense? Things looking strong?
Yeah. Congratulations to you and all the viewers. Obviously, all milestones are good, and particularly a happy occasion when the milestones are on the positive side. So I would say it's just a number, 20,000, but it's definitely a big number. And I think it's clearly reflecting, obviously, the strength in the economy, all the good things which are happening from the leadership of the country perspective in terms of growing India's importance in the global economic order, as well as the focus on growth. And obviously, despite the Nifty being at 20,000, it's not that we are in a crazy kind of a zone, at least as far as the Nifty P multiples are concerned. So I think all in all, it's been a pretty good, I would say, the past few months.
Is there? You're a stock picker. You don't look at, you don't differentiate in that sense between. You don't do market cap based investing, but there's been so much talk of mid caps and small caps and how well they've done, and whether they've done too much, and whether large caps will start to do better now. Sunil, just a quick word. How do you see that? How do you see that debate?
I clearly believe that in the near term, there is now catching up to do from the large cap side. I think when you look at stocks which offer you value on fundamental basis, more large caps pop up than the micro caps and the small caps. I think there's a lot of fear of missing out, a lot of momentum, a lot of theme-based investing, particularly from the mass retail, which is happening on the smaller companies. And, I would, really believe that it is time now for the large caps to do some catching up. And, Nifty at less than 18 times P clearly offers more value than some of the smaller companies.
Well, that's an emphatic point that you're making, Sunil, and great to hear that. Vijay Kedia is also with us. Vijayji, good to have you with us here. I'll ask you for your views, but you're a poetic man, so I don't know if you want to express your views in a poetic way. 20,000 on the Nifty.
No, good, yeah. At least what I also feel the same thing. Like it's a journey. You know, it's not a destination. And we will see many thousands like this: 20,000, 25,000, 30,000. Only problem is with the speed where the market is rising. That could be a little worrisome and all. And I will tell you one example. Pratyaksham kim pramanam, as they say, that I have not sold any shares, and whatever shares if I have sold, I have put them into some you know, I have bought some other shares. So I'm bullish in the market. It's a journey. It will keep on happening, and stock will keep on rising and falling and churning, and all these things will happen in this market. And I am more worried about these new investors. You know, nowadays I'm getting 3-4 phone calls. You know, and the people, they had never interacted with me, and now they are calling me or talking to me. अरे मेरे को क्या लेने का है, मेरे को बता दो, छोटा शेयर ले लूं, ये ले लूं. अभी भी people are talking about छोटा ले लूं, penny stock ले लूं, ये ले लूं, वो ले लूं. So I'm more worried about all those people. So since you said, I will recite my 4 lines of one of my songs, that तेजी में है सभी जीनियस, सभी समझते खुद को हीरो, मंदी की आंधी में बनते और बिगड़ते फिर से जीरो, बनने और बिगड़ने में ही नई जिंदगी शुरू हुई है, फिर भी अपने होश न खोना चाहे पार्टी शुरू हुई है. So this is the message I would like to give to the newcomers and small investors.
Oh, loved it, Vijay. Thanks so much for joining. Sunil, request you as well to hang on, Vijay, as well as Sunil. We have Nilesh as well, Managing Director at Kotak, who joins us on the show. Hi, Nilesh. Good afternoon. What an afternoon, right? 20,000 on the Nifty. And in fact, we should have seen this, you know, a while back, maybe quite a few sessions ago. What's your view from here on the index itself? And do you think 21,000 in 21 sessions? Is that possible?
So it's always difficult to predict market in a momentum. Yeah. And as Vijay Bhai was mentioned, this is a market in the momentum.
Yeah.
I think this is time where, yes, on one side we should celebrate 20,000 Nifty. But please remember that this is also time to exercise some amount of caution. As you go down capitalization, valuation should become cheaper. In current market, it is becoming expensive. Lower the market cap, higher the valuation. Generally, such kind of valuation don't last long. So buy quality, buy stocks at reasonable price, buy stocks with a longer term horizon, not with the momentum, and enjoy the party, but be responsible.
No, I think today is a 20,000 kind of day, right? We've had the 2 20,000s, one of course on the Nifty. Today is also the day when we've got 20,000 crores in inflows and mutual funds. That's a big number, and we've not seen that number for the past several months. So it's a historic day by that measure. Nilesh, the problem is that investors are not really paying heed to your advice, are they? Because look at where the money is going. It's small cap funds that are just drawing in more and more of this rush. I think over 4,200 crores today as well. Small caps, mid caps have gotten over, I think, 2,500 crores even this month. So that trend is continuing. Money, at least as of now, has not been going into large caps. What would you say to that?
So undoubtedly, as I said, this market is driven by momentum. The past 1 year, 3 year, 5 year, 7 year, 20 year SIP returns or absolute point-to-point return in small and mid-cap looks so attractive that it gives more confidence for people to invest into. As long as people are coming via SIP into small and mid-cap fund, I think that's fine. If you are under-invested in equity and you want to take risk of small and mid-cap at this valuation with a longer-term horizon, that's fine. But otherwise, if you are trying to play the momentum, then I think this is time to be worth cautious. The risk-reward ratio appears better tilted in large cap and larger mid-cap compared to, let's say, small caps and micro caps and mini caps.
All three of our guests are saying, so I think one should take note, right? I mean, between them, I think we have what?
40 decades, 50 decades of wisdom, collective wisdom, probably
and a lot of money.
Yeah.
50 years.
Oh, 50 years, sorry.
50 decades, but more. But just one point, Sunil, you began by saying that definitely there's more room in large caps. But which sectors, banks, financials, large cap IT, where exactly in large caps now?
No, so the banks, actually, if you see, there's a little bit of a dichotomy. The June quarter numbers, banks declared the best results. In fact, I would say, 40-45% of the growth in the Nifty earning was because of the banks and financials. And that segment has been a laggard in terms of performance. Obviously, there are reasons, oil has gone up. The concern on inflation rearing its head is again resurfacing, particularly overseas. I think save for that one, I would say, factor to keep in mind. I think the banks are poised, at least, our view is that banks are poised to do a catch-up very, very quickly. And, the demand growth for credit is pretty decent. The spreads are pretty decent. Asset quality continues to be as pristine as possible. And if we are looking at the country growing, faster over the next maybe half to 1 decade, I think this is a segment where there is still a lot of room. And valuations-wise, particularly on a PE basis, most of them are like, low double digits, like 10, 12, 15 times, even for larger banks. So I think banks definitely have room for a quick catch-up.
Vijayji, you want to come in? You wanted to come in?
Yeah.
Go on.
Yeah,
Go on.
I want to say something. You see, I was reading a newspaper today also and last week also. People are talking about more worried about mid-cap and all. Let me tell you, I think still maybe in mid-cap there are some shares which have really started their journey, up journey has started. My problem is not mid-cap and small caps. As earlier also I had said at different platforms many of the times. So there are 4 caps, large cap, mid-cap, small cap and bhangar cap. So 5,000 shares come into the category of bhangar cap. So I am more worried about the bhangar caps, not about the mid-cap and the small caps. Because it's a big platform, so many shares are there. So usually these all small investors, new investors come, they would prefer to invest into bhangar cap, जिसका कभी नाम भी नहीं सुना था, जिसके बारे में जानता भी नहीं है, वो भी उसमें invest करने के लिए आ रहे हैं. तो वो temptation जो है ना, that is very risky. No, that is not going to end up in a good way. So this is what I would like to say. Yeah.
Vijay, point well made and taken. Nilesh, are there more legs to the PSU rally? Because cycles right now are getting shorter and sharper. The last 18 months have belonged to the PSU stocks across various categories, power, railways, defense, etc. So is there more upside in these PSU stocks, or do you think they've run their course?
I will be more on the conservative camp on the PSUs. I think a lot of them have had a miraculous run. And while there are reasons for that run, I think now valuation-wise things are reaching near its peak. Probably there is a time for consolidation in the PSU space. But there will be always some exceptions to the rule because some PSUs which haven't run may participate. But overall, should there be a sector rotation from PSUs into non-PSUs? It's quite possible.
Same question, Sunil, to you as well. Exactly that same question. I mean, because this has become, look at what's happened, for instance, with railway stocks, right? And then we had the G20 announcements. Stocks were up 160%, 180% already, and yet they react with such ferocity to any sentimental news. Right now, we don't have details of any order wins, any specific contracts, but that is just the kind of market that we're in. So how does that one navigate that when it comes to super hot sectors like PSUs, power, defense, and railways for sure?
No, I think it's a painful subject because most of us are hardly invested in that segment, right? And every day you see the prices moving up. But I think having said that, I think hats off to the government for completely transforming the way the PSUs are run, the focus on profitability when we interact with the CEOs and the MDs of a lot of these PSUs. They have started now coming out as really professional, as comparable to the private sector. Having said that, I think, as you rightly said, a lot of this, like the last 10-15 days move has been purely based on news flows, So, yes, there has been this announcement of a rail corridor, but it's only an announcement. It's going to take a lot of time. And I think some of these PSUs obviously have low floating stock. And therefore, with this news flow and this huge interest and the momentum also on their side, the price movement has been very, very ferocious. So I think we are careful. I would again highlight that, a good combination to play both PSUs as well as the banking segment, which I just talked about, is through the PSU banks. I think there the results have been fantastic. They're trading at 4-5 PE multiples other than the largest PSU bank, which is again very cheap. And our view is that it is now better, if you want to be in the PSU segment, to play it to the PSU financials and banks.
Sunil, just a question to you. If a viewer watching, if they're a do-it-yourself investor, if they're invested in a scheme, a mutual fund run by Nilesh, or a PMS that you run, or other structure, the fund manager will decide for them what to do based on their experience, of course, etc. But if somebody is investing on their own and have made a lot of money in mid caps and small caps, etc., and are sitting on gains, is there not a one-size-fit-all kind of advice, but something which one can do to kind of lock in some gains and move into large caps? Or what would you tell that person?
Prashant, just because a stock has moved up, should we book profits? I don't believe in that theory. So if you are comfortable from a fundamental perspective, I don't think this is a time to sell India. We are heading into a great phase, and stocks might correct by 5-10%. That can always happen. I think the concern is only on theme-based and momentum-based non-fundamental stock. Vijayji mentioned about Kachara. I would not say Kachara or whatever. But what I would say is that if it is only news flow-based, without the fundamentals supporting the valuations, then obviously, you should use this opportunity. It's always said that in a bull market, all your past mistakes you can rectify by selling. And in the bear market, all your, I would say, the ruin, you get an opportunity to buy them back. So this is a time where all your past mistakes, it's an opportunity to just and just get into some good stocks.
Absolutely, well put, and not make fresh ones, right? That's the point. Not make.
We'll all make fresh ones as long as we keep on reducing our mistakes. We are fine.
Absolutely, Vijayji, you want to come in on exactly that point for viewers who are watching, and do it yourself. I mean, running your own portfolio, it's become a big thing world over, in India as well. And people want to do it. People want to learn. People want to invest their own money, be responsible for their own investments, etc. I mean, as a veteran, what would you tell them at this juncture?
No, since you were discussing about these PSUs and all those railway stocks and defense stocks and all, let me tell you, I personally find them now very expensive. Okay, beyond imagination, they are expensive. So people should understand. People should always remember. See, if your view is for 10 years, like Sunilji said, India story, if you are really playing India story, that means you are playing for a decade. Then it is all right. But you are talking about India story and playing about T2T ka story or PTSD story or 6-month story or 3-month story, then you are in problem. Then you should remember, as I always say, that Rome was not built in a day, but Hiroshima and Nagasaki were destroyed in a day. So this is what people should be very cautious in this market. If you have a long-term, I am playing a marathon here. I'm running a marathon. Okay, so I don't mind if my stock goes up from 1,000 rupees to 4,000, 4,000 to 2,000 rupees. I don't mind, But like suppose if I'm playing the momentum, then one has to be very careful.
You said defense, railway, Vijayji, or एक और sector था आपने बोला?
नहीं, ये सभी like the stocks are rising on the कि भी इतना order book हो गया, इतना order मिल गया, और वो फटते वो पटेल इंजीनियरिंग का आ गया, 1500 का order मिल गया और market का 10,000 करोड़ बढ़ जाता है. That is पागलपन है यार, that is euphoria क्या, what nonsense is that? ऐसे होता है क्या यार?
Nilesh?
Absolutely.
Nilesh, while the India story is intact, right? The announcements, the policy decisions have all been solid. But is there any risk which is emanating from the global front, according to you? Because there is a top-down element to it, ultimately.
So, let me make just one comment on PSU side. There's no divestment supply right now. Government had sold Muscat Dock at 200 rupee and now at 2,000 rupee. There is no supply. At some point of time, divestment supply will emerge, which will cool off the PSU stock prices. Second, from a global point of view as well as local point of view, there are some events which one has to keep in mind. Locally, we have seen monsoon turning deficient in double digit. August was the driest month in almost a century. If September rain doesn't revive, then there will be adverse impact on inflation as well as rural recovery. On the global side, oil is our Rahu and Ketu of the Kundli. It has gone up to $90 because of the production cuts by Saudi and other non-OPEC countries. We have ability to bear higher oil prices, but if, God forbid, they crosses into 3-digit, then there will be some impact on our economy. So we'll have to keep watching developments as it occurs. Market today is undoubtedly combination of flows as well as fundamentals as well as sentiments. And more importantly, there is a Birbal ki kahani playing out. Our growth story is good, but our peers are scoring self-goals. Russia's invasion of Ukraine, China's property bubble, Brazil's communist government, Turkey's ultralight loose monetary policy. I mean, their lines are becoming smaller and smaller, and hence our line looks bigger and brighter.
Yeah, you mentioned some important concerns, Nilesh, and it's really it's key to keep that in mind as well. Inflation, as you said, and this week is quite crucial because we'll get the CPI print for us here in India. We'll get the US CPI print, and let's see what happens. Oil has been at 90. We all know that. Bond yields, by the way, the US 10-year yield has been pushing towards 4.3%. So those risks are still on the horizon. And that PSU supply point is very well taken. At what point does the government want to come in and make the most of this party? Of course, the government is the one that's kind of, keeping things in its vault in terms of that equity. So that all those points are really well taken. Sunil, I want to just ask you, something on valuation. So typically we get into that routine of asking ourselves, where are we now? What is the historic average? I think we're 19 times, 20 times perhaps right now. And then we say, okay, maybe 22 times, 23 times is typically where India peaks out. Is that still the way to look at it, or could that lead to a bit of an upside trap, which also as investors, we don't want to be in that? We're also looking at a general election this year. The narrative around, PSUs and all that's happening, CapEx, the investment cycle picking up. I mean, CI, FICCI have been making that point that I think we're on the cusp of the private sector CapEx cycle picking up. So while we want to be very mindful of valuations, we also don't want to come in a upside valuation trap, just too fearful. Your thoughts on this?
So in some sense, earnings are growing at about 1% a month. We are looking at 12 to 15% earnings growth over next 2 years. So either there could be a time correction where prices stay where they are and earnings catch up with them. In today's market, where there are more aggressive buyers across local and global investors, it looks like that the momentum might just continue. But if you are investing at this level, please remember that you are not expecting extraordinary returns from the stock market like the past. You are expecting moderate return. So if you are coming with longer term horizon, if you are coming with moderate expectations, then I think you are still fine off. If you are coming with the expectations that last quarters or last year's return will be repeated next quarter or next month, it might prove to be too much.
Okay. Sunil, you quickly want to come in on that? Valuations. Do we have to stick to the historic levels?
One is very clearly, I think after 6-8 quarters, we have had earnings upgrade this quarter, and a decent earnings upgrade. And I think our view is, Surbhi, that the second half of this year is going to be a great year. Obviously, Nilesh mentioned about monsoon and all. Save for some disaster happening in the next 1 month or so, our view is that second half from a consumption perspective also should pick up. And election, there is normally higher spending and higher consumption which takes place. And the next 2 years, at least our view is that we are heading to a 16-17% profit growth trajectory. So now if you look at it and if you start discounting FY25, so from October FY25 will become 1 year forward. We are roughly around 18 times 1 year forward, which is like 8-9% premium to the long-term average, but not completely out of whack. So I think valuations-wise, we are quite comfortable. We don't see any major concern. If the growth rate pans out the way most of us are expecting, I think there is still a decent, I would say, room to go even from a fundamental perspective.
विजय जी, लास्ट वर्ड टू यू, और एंड आई विल रिक्वेस्ट यू, एक बार दोबारा आपने जो सुनाया था वो हिंदी में एक बार दोबारा सुना दीजिए, थोड़े आराम से.
Okay. No, because your time is precious, so that is why I was in a hurry. It is I am always in a hurry. So it was like this कि तेजी में है सभी जीनियस, सभी समझते खुद को हीरो, मंदी की आंधी में बनते और बिगड़ते फिर से जीरो, बनने और बिगड़ने में ही नई जिंदगी शुरू हुई है, फिर भी अपने होश न खोना चाहे पार्टी शुरू हुई है. So what I mean to say, long-term party must have begun, like all these Pandits are Sunil ji and Nilesh bhai, everybody is saying कि हाँ भाई ठीक है, India का भी growth story चालू हो रहा है, and that is all, of course. So maybe we are it's a new beginning. It could be new beginning for India. Lekin there would be many hiccups, so don't try to board a train which is running at a 50 kilometer ka speed mein. So cautious is the buzzword here.
So it's the same advice that our parents would always give us, right? Go enjoy, party, but do so responsibly. I think that's what Vijay is saying.
Absolutely, and I think it's so well put. Vijay ji, thank you very much for joining us. Sunil, great to speak with you as always. Years of wisdom distilled, in that interaction. And Nilesh, always a pleasure speaking with you, and you put out some great points today on this program. Thanks indeed, all of you, for joining us here on CNBC-TV18. Thank you. Well, we'll wrap up on this edition. A closing bell, slightly extended closing bell, but 20,000 in the bag. Thank you very much for watching. Up next, we get you excerpts from our conversation earlier with Ajay Banga, Chief of World Bank, on the sidelines of the G20 summit earlier. Listen.